Now let's look at 3 disadvantages of an FHA loan. Easily, we can say that mortgage insurance premium is the biggest downside of the FHA program. A borrower from this type of home loan has to have mortgage insurance. The Department of Housing and Urban Development, HUD, have set this as a requirement to protect lenders in the case of a borrower's default. The HUD technically acts as the manager of the FHA housing loan program. FHA loan borrowers must pay these 2 mortgage insurance premiums. First is an upfront mortgage insurance premium, or MIP. This is equal to 1.75 of the base amount of the loan. Second is the annual premium, which can vary from loan to loan. Most FHA borrowers pay around 0.85% of the base amount. The borrower can roll these premiums into the loan. It reduces their out-of-pocket costs, but inflates the monthly payment and the total loan over time. There really is no escaping for an FHA loan borrower from this first disadvantage. Conventional loan borrowers can put up at least 20% down payment and avoid paying for mortgage insurance. Borrowers may encounter some property restrictions. HUD manages the program and it has some specific rules on what types of property a borrower can purchase. For example, purchasing a vacation home via an FHA loan is out of the picture because the guidelines do not allow it. The appraisal process is also very strict. HUD-approved appraisers actually visit the property to ensure it meets all the program requirements, particularly on safety issues. HUD also has some distinct guidelines about condominiums. In fact, not very many condominiums precisely meet the FHA approval standards. Borrowers who are planning to purchase a condominium unit with an FHA loan must choose a project on the HUD's approved condo list. This list is available on the FHA website. We will discuss more about condominium purchases in a different article. Another disadvantage is that many sellers do not want to deal with borrowers who will use an FHA loan. This is particularly common in hot real estate markets because sellers prefer more competitive offers, which are abundant. This could be the result of poor advice, or more accurately, bad advice, from real estate listing agents. Some agents drive their clients away from FHA borrowers in favor of conventional mortgages. The main reason would be the appraisal process we mentioned earlier. They think, although inaccurately, that the seller will undergo a strict and inconvenient appraisal process when they work with an FHA buyer. In the past, it was the practice of borrowers to require sellers to pay some of the closing costs, in the case of FHA loans. Times have changed though, and this rule has gone through some revisions. Today, buyers cover their own closing costs, especially when the seller successfully negotiates it that way. And that's it for now. On our website, you can find more posts and podcasts, as well as calculators and other financial tools. Do you consider using FHA loans? We would love to know your thoughts, so feel free to share them in the comments below. We hope you enjoyed it. Don't forget to subscribe to our podcast channel on YouTube, and we'll see you next time.